All right, let's jump right in. We're doing a trader's breakdown of PG Electroplast. That means no fluff, no noise, just the crucial levels and risks you actually need to know about.
So let's get right to the heart of it. This is the one question everyone's asking when they pull up the chart for PG Electroplast. Is this rally for real? I mean, does it have legs? Or are we standing on the edge of a cliff about to see a massive reversal?
Look, you can drown in the headlines and all the online chatter. We're not doing that. In this breakdown, we are laser-focused on what the chart is actually telling us. We're talking about the hard support and resistance levels, the stuff that really defines the next move.
Okay, first things first. You gotta understand the personality of this stock. Think of it like a high-strung racehorse. It's a small cap, it's in a hot sector, which means it's built for one thing, momentum. And that high volatility warning you see there? Yeah, that's not just for decoration. This thing can absolutely fly, but it can turn on a dime and bite you just as fast.
So, keeping that high-octane personality in mind, let's zoom out for a second. Before we get into the nitty-gritty, we have to understand the bigger story, the overall trend.
And this is where it gets really interesting, because this slide perfectly captures the split personality of this stock. Yeah, long-term, the trend is up, no doubt about it. But it is not a smooth ride. It's not an escalator. It's more like climbing a really sketchy mountain with huge, sudden drops along the way. These drops are usually sparked by some news or just a quick shift in sentiment. It's a wild ride.
All right, enough with the big picture. Let's get tactical. How does that choppy trend translate into actual numbers on a chart? Let's decode the price action and find the levels that matter right now. Okay, before I throw some numbers at you, just a super quick refresher so we're on the same page. Support, that's your floor. It's where buyers tend to step in and say, not today. Resistance, that's the ceiling. That's where sellers get tempted to cash in. And listen, these aren't just random lines. They are the literal battlegrounds where the bulls and bears are fighting it out.
And here they are. This lays out those battlegrounds for PG Electroplast perfectly. You see that 720 to 740 zone? That's the front line. It's the immediate support the bulls have to defend. But the real line in the sand, the oh no level, is down there at 650 to 670. If that breaks, we've got problems. Now look up. Sellers are waiting in that 820 to 840 area. And the big boss level for the bulls, that's 900. A clean break above that, and it's a whole new ballgame.
But, price alone is just half the story. You have to look at the volume to understand the emotion behind the moves. When this thing rallies, notice how the volume builds up nicely? That's conviction. That's strong money coming in. But then, look at the corrections. Wham! You get these massive volume spikes. You know what that is? That's panic. That's fear. That's the weaker hands getting shaken out of their positions. And that panic is the fuel for these insane swings.
Okay, so we've got our technical map laid out. We know the key zones. But now we need to ask why. Let's zoom out from the chart for a minute and dig into the fundamental story. And more importantly, the risks hiding under the surface. And what you find is this classic two-sided coin. On one side, you've got the bull case, and it's pretty compelling, right? Huge growth expectations, a tailwind from a really strong sector. It's a great story. But you flip that coin over, and you've got the bear case. The earnings can be kind of all over the place, and you absolutely cannot forget this part. It's a high beta stock, so if the wider market sneezes, PG Electroplast is probably going to get a full-blown flu. And this is the part you really, really need to hear. These are the red flags. Let me be perfectly clear. The crazy volatility, that's not a glitch. That is the stock. It's part of its DNA. Sharp, painful drops can happen out of nowhere. So no, this is not a buy it and forget it kind of deal. Not even close. One bad earnings report could absolutely crater the stock. And you always have to watch out for getting lured into a trap right as it's hitting a resistance level.
All right, we've got our levels, we get the backstory, we know the dangers. So, what do? How do you actually trade this thing? Let's get into a concrete game plan.
So, if you're feeling bullish, here's your checklist. It's simple, but you gotta be disciplined. Number one, it has to hold that 720 to 740 support zone. That is non-negotiable. Number two, you need to see buying volume start to pick up. Not just a little tick up, but a real expansion. If you get those two things to line up, then yeah, a push towards that 820, 840 resistance becomes a high probability play.
Now for the bears, the playbook is just as straightforward. The big red flashing light is a clean break below that 650 support level. If that happens, and this is a big and, if the whole market is rolling over at the same time, you've got a problem. Because this stock is high beta. A break like that won't be a gentle slide. It's going to be a fast, brutal drop. So watch out.
So we've put all the pieces on the table, right? The wild personality,
The key battlegrounds, the bull and bear scenarios, it all boils down to one simple question. Who should even be trading this?
And this chart really spells it out. Look, if you're a momentum trader, if you live for volatility, this stock is practically made for you. If you're a swing trader, you can definitely find some nice plays between those key levels we talked about. But if you're a long-term investor, probably best to just watch. The consistency isn't there yet. And if you're a beginner, seriously, stay away. The volatility will chew you up. It is not a friendly place to learn.
So let's boil it all down. What's the final verdict? The big picture is bullish, yes, but it's wrapped in a ton of volatility. The key factor right now? It all comes down to holding that support. If support breaks, the risk of a fast, ugly drop is huge. So the bottom line is this. This is a pros stock. It's for traders who are disciplined and who put managing risk above everything else.
And that brings us to the last and honestly, the most important question. And this question isn't about the stock, it's about you. This thing moves like lightning. So before you even dream of clicking the buy or sell button, you have to look in the mirror and ask, is my strategy fast enough for this game? Am I disciplined enough to handle the heat? Because if the answer isn't a definite yes, you're better off watching from the sidelines.